On behalf of the board, I thank you for your attendance to this AGM that's done telematically, given the law guaranteeing your rights under equality of conditions and flexibility through the use of technological means that are adequate, regardless of the place in which the shareholder lives. This format allows us to make the most of the resources, and it's well aligned with the best practices of corporate governance and digital transformation. The notary public that will be attending this meeting is connected to the remote assistance platform. The notary public has full access to the platform, through which you will get to know all of the actions carried out by the attendants, and the rest of the board members will be attending this meeting. If any shareholder or representative that attends remotely requires technical assistance, you'll be able to connect with the platform service supplier through the assistant channels provided by this platform. This AGM has been called according to the law and the company's bylaws. Given that the announcement of the call is quite large and known by all of you, I take it as read unless any shareholder expresses his or her opposition through the remote assistance platform. So we will now verify the compliance with the legal requirements for the valid constitution of the AGM, and I give the floor to the Secretary of the Board. Good morning, ladies and gentlemen. As pointed out by the Chairman, I need to verify that we are complying with the legal requirements for the valid constitution of this AGM. The call of the AGM was approved by the board, and it was published on the 14th of May on the National Stock Exchange Committee's web, and on the 15th of May on our corporate website. And on the 16th of May it was published in the La Vanguardia newspaper. This AGM, as you know, is held under its first call. Just like in previous years, we inform the shareholders that this session of the AGM is being recorded, and it's going to be transmitted live through the company's website, which allows us to carry out a follow-up of the General Assembly by those shareholders who had not registered in the remote assistance platform. So this recording will be made available to the company's shareholders through our website. As announced by the Chairman, the Board agreed to require the presence of the notary public, Mr. Jesus Maria Ortega Fernandez, so that he prepares the minutes of the AGM, and I'm going to introduce now Mr. Ortega. The notary public is connected remotely to the AGM, and he has access to the remote attendance platform, and he will make a note of the number of shareholders and representatives that attend, and in that sense the votes of the attendants through the remote means. As detailed in the announcement, attendants have been able to send their questions in writing since the 13th of June, and they will be able to do so as well in writing through the remote attendance platform, to which they are connected until the end of the speeches of the Chairman and the board members. The questions or clarifications during these presentations will be answered orally during the meeting. I'd like to remind the shareholders and representatives that are attending remotely the AGM that have been able to issue their vote about the proposals in the points included in the agenda from the moment they have been connected as attendants to this AGM. And if they have not done so beforehand, they can do so through the remote attendance platform until we end the summarized reading of the agreement proposal. From that point of view, the shareholders and representatives who want to vote against or abstain with regards to one or many or more or all of the proposals in the agreement, or inform about their leaving the meeting, they should communicate so through the remote attendance platform if they have not done so already. On the other hand, I'd like to inform you that, as we have said in the AGM announcement, those whenever there is a conflict of interest, the representation will be given. If the representative has not given specific voting instructions, they will be given to the Secretary of the AGM, and would like to inform the shareholders that the announcement of the AGM, the full texts of the proposals of the agreement and the reports approved by the board, and also the rest of the documents and information required by the law or the bylaws, they are and they have been available in an uninterrupted way on our corporate website, and since the 15th of May of this financial year. Next, I will inform about the data of the attendance quorum in order to verify the valid constitution of this AGM. Each one of the shareholders can see projected on screen these data. There are in the AGM 87 shareholders who are holders of 219,755,076 shareholders, equivalent to 35.03% of the equity. They are represented in the AGM 134 shareholders who have 257,673,131 shares, equal to 41.07% of the share capital. And in all, we have 50,691,533 shares, equal to 2.50% of the share capital. According to what has been just previously said, the equity is 1,103,578,000, represented by 477,418,207 shares, which is equal to 76.01% of our share capital. So, according to these, the attendance quorum is above the subscribed share capital percentage demanded by the law and the bylaws for the valid constitution in its first call of the AGM in order to deal with the issues included in the agenda. So I'd like to tell the shareholders that the final list of attendance has been registered in the remote attendance platform, and it will be finally reflected in the notary's minutes. Okay, once the shareholders have been informed about the attendance quorum, we declare validly constituted the AGM of our company in its first call in order to discuss and adopt the agreement about all of the issues included in the agenda that will be voted. So, I give the floor now to the notary public so that he asks the attendant if there is any reservation or protest about what has been said about the number of shareholders or the capital that's present or represented. Thank you, Mr. Chairman. Now that we have the quorum of the attendance and the valid constitution of the AGM according to the law, I inform the shareholders and representatives that if any attendant would like to express some reservation or protest about the valid constitution of this AGM or about the global data that have been expressed, they will need to communicate to me through the remote attendance platform that has been available, so that if so, it will be included in the minute that will be issued about this AGM. Thank you, Mr. Notary Public. Thank you, Mr. Notary Public. And next, the Chairman and the Chief Executive Officer will inform about the most relevant aspect of the company. Mr. Chairman, you have the floor, sir. Good morning, everybody, ladies and gentlemen. In a very succinct way, let me explain which have been the main facts about the financial year we have just finished, and also the context in which it has all been developed, and the Chief Executive Officer may give you some greater details to what I've said. The financial year 2025 has been marked by a very demanding environment, characterized by the volatility of the financial markets, the geopolitical tensions, and a more restrictive financing context. In this context, Colonial SFL has shown the robustness of its business and model and the resilience of its assets. We have ended the year with very good figures, complying with reaching our goals and consolidating ourselves as leading platform of prime offices in Europe. The net profit was 344 million euros, 11% above the previous year, whereas the net recurrent was 211 million euro, with a growth rate of 9%. The net recurrent profit per share was at 33.6 cents, on the highest end of the guidance, confirming the group's capability to comply with its commitment with sustained growth. And the income parent, 399 million euro, reaching a growth rate of 6%. In comparative terms, like for like, as we say in Spain. Promoted by the prime assets portfolio, the capacity to capture rent increases in strategic position. We have reinforced our financial position, accessing successfully the financial markets with issues of bonds with 1.3 billion euros in a complex environment, which shows the confidence of the investors in our risk profile, and this has allowed us to maintain a position of liquidity and a financial cost that's very advantageous. We have made headway significantly in our divestiture program, going above 300 million euros in operations at prices that are well aligned or above the assessment. These appraisals have reinforced our balance sheet and to reduce our leverage, positioning the debt over assets ratio of 35% and reducing our net debt by more than 200 million euros. With reinforcing the group's financial flexibility, I'd like to highlight about the continuation of the integration of Colonial and SFL marks the start of a pan-European growth based on operational excellence and leadership in sustainability. We want to maximize the value of our portfolio, capturing investment opportunities with very attractive profitability rates. 2025 as a whole has been a year in which, in spite of an adverse environment, Colonial SFL has had a strong position combining operational growth, financial discipline, and a prime portfolio that shows its capability to generate value in a sustained way. First of all, I'd like to highlight our commercial activity with more than 147,000 square meters during the year, better than this, generating 64 million additional rent, which implies an increase of 22% compared to the previous year. This growth rate reflects the enormous demand of high-quality spaces in strategic locations. Secondly, we have captured a very relevant growth rate. Our prime portfolio had growth rent of 7%, with special dynamism in Barcelona and Madrid in the fourth quarter of the year, whereas in Paris, the rents in re-let surfaces increased by 16%. This showed the pricing power of these assets and Colonial SFL's capabilities to generate growth in any place. Another key aspect has been the evolution of the value of our assets. The gross value of our assets increased until 2,204 euros, a growth of 3% in comparative terms, like for like, whereas the net value of our own equity, NG8, and the rest reached 6,085 million euros, equal to 9.70 euro per share, which shows Colonial SFL's capability to generate value in a sustained way, based on the quality of its prime portfolio and its strategy focused on the best locations in the European markets. We have also kept a highly selective investment policy based on opportunities based on the asset's profitability, whose attractiveness improves the average profitability of our assets and increases the profitability for the shareholders. We have devoted more than 200 million to strategic investments, reinforcing our bet for segments with high growth potential, like science and innovation. As a whole, these elements reflect a business model that's solid, dynamic, and geared towards growth that allows us not only to obtain consistent results but also to position ourselves in an optimal way to capture new opportunities in the next few years. The results of 2025 leave us with the structural strengthening of our business model of our prime portfolio in Madrid, Barcelona, and Paris. We have grown above the market average, accompanied with a strong commercial activity, the generation of the divestiture program, and the reduction of the loan-to-value, indebtedness value over assets that allows us to face 2026 with greater flexibility and strength in the future. So we start 2026 in an environment that's still marked by geopolitical and financial uncertainty with new international tensions in the markets. However, Colonial SFL starts out from a very solid position that allows us to face this new phase with great confidence. Our strategy is based on three main pillars: financial discipline, prime focus, and selective growth. First of all, we keep a rigorous management of the balance sheet with solid metrics and a well-controlled financial cost in order to keep it below 3% in the next few years. The optimization of our financial structures will keep on being a priority. Secondly, the group continues making headway in the execution of the divestiture program, which allows us to keep on getting rid of non-strategic assets, improving our portfolio, and as we analyze new investment opportunities in strategic markets. And finally, the group will keep on promoting growth through urban regeneration programs of high-quality assets adapted to the new needs of our customers in a context in which the demand for prime products is still very solid. As a whole, our strategy, financial discipline, and gearing towards growth, which allows us to keep on generating value in a sustained way, even in highly complex environments. We keep on making headway in our commitments, ESG, basing on energy efficiency, a reduction of our carbon footprint, and complying with the highest sustainability standards. Colonial SFL shows its continuous support to the World United Nations Pact and also the renewal of its commitment with the 10 principles that are referenced with human rights, labor rights, and the fight against corruption. The current market context, marked by volatility and uncertainty, makes significant challenges for the real estate sector, but it also opens up interesting opportunities for companies with a solid positioning like Colonial SFL. In this environment, we observe a clear trend of concentration of demand in the main European urban cores in our traditional markets, Madrid, Barcelona, and Paris. There are new opportunities in cities like Berlin or Munich, where capital is growing in a sustained way. Our role in this context is a clear one. We offer product with the highest quality and to respond to the new dynamics. Colonial SFL counts with a prime asset portfolio that's perfectly adaptable to the needs of companies that look for strategic positions and locations, efficiency, and sustainability. In addition to highly volatile scenarios, there are new opportunities for attractive investments. Our financial solidity and our discipline allow us to approach these opportunities in a selective way with a long-term vision and always prioritizing the creation of value. To sum up, we believe that the market is coming into a new phase in which the prime product will be very relevant. In this context, Colonial SFL is in a privileged position to keep on leading the real estate European sector, capturing opportunities that are generated in the next few years. And now I'm going to talk to you about the second part, agreement proposals. The agreement proposals that the board presents for the approval of the AGM is well aligned in general terms with the ones approved in previous years. Allow me to highlight the main novelties grouped into three blocks. The first one, in terms of capital and funding, we propose a reduction of our equity through the monetization of our own shares in order to optimize our company's capital structure, thus improving the value per share of our shareholders. Also, the renewal of the powers to the board to issue convertible bonds into new shares and values, instrument that gives the company the needed flexibility to take advantage of market opportunities in an agile way. Secondly, in terms of corporate governance and appointments, we want the re-election of two board members Pedro Iñales Serra as CEO, and I myself, looking for visibility in the management of the group. And additionally, we present the approval of the change of the rules of the AGM to adapt to the current name we hold. Thirdly, in terms of remuneration and incentives, we want the approval of a new remuneration policy of the board members for the next 3 years, which is it's a continuation of our current policy, and a new incentives long-term plan, which implies giving shares from the company to align the interests of the management with the creation of value for the company long-term. In addition to the previous proposals, we present to the AGM the distribution of dividend of 32 cents per share, thus increasing the amount to be distributed compared to the previous year. For this, the board has valued the reasonability and consistency of the dividend. This increase reflects the solidity of the group's result and our will to keep on aligning the distribution of dividends to the shareholder with a sustained creation of value. The Secretary of the Board will give greater color to these proposals that will be presented for the approval of the AGM. In terms of corporate governance, I'd like to mention especially the most relevant aspects with regards to this since the last AGM, and some aspects of our governance model, and a follow-up of a recommendation of the Good Governance Code. Colonial SFL has always been committed with the good corporate governance, and has tried to comply with the highest standards of ethics and transparency, as is shown in our sustainability memo, which is available in our company's website. The best indication for this commitment is reflected in the fact that at the end of 2025, out of the 58 recommendations of the Good Governance Code, our company complies with 56 of them. This level of compliance, which is above 96%, reflects the very rigorous and constant work carried out by the committees. The two recommendations that have not yet been complied with respond to specific circumstances that I will explain shortly next. Single commission for requisitions and appointments. It is considered we believe we need to keep on having a single appointment and remuneration. With the beginning that the structure and dimensions of the company, it would not be efficient to separate its competencies into different committees. I'd like to highlight that the existence of a single commission favors the coordination of the faculties and tasks to be carried out, and that under no circumstances it actually hinders our legal requirements, and it limits cost with additional requisitions for the board members. So it is considered not to be necessary to carry out this separation. And the amount of independent board members, although the percentage is not yet 50%, the company believes that given the structure of the company as of today, the representation and typology of board members is right, so that the interests are well represented in the management board. And talking about the composition of the management board, there have been changes during 2025, during the first half year of 2026. The board is composed of 13 members, which are with a clear separation of tasks between the non-executive chairman of the board and the CEO, with the board, through the Committee of Appointments and Retributions, has a succession plan for the main posts of the board, thus guaranteeing the continuity and stability in the company's governance. With regards to the committees, on the 16th of April 2026, the board agreed appointing Mr. Manuel Puig Rocha as a new member of the Executive Committee. On the other hand, I'd like to highlight the level of individual attendance of the board members to the board meeting, which was above 98% in 2025. This shows the full commitment of all board members with the company. And next, allow me to highlight that in terms of diversity of the group, which we keep an additional financial year. The number of women in the board out of the total members represents currently 46%, and therefore, just like in previous years, it is still above 40% complying with our duties in terms of gender equality. The 3 committees are chaired by women. 50% of the posts in the high management are led by women, which shows the company's real commitment with the gender equality in the company. These data confirm that diversity in Colonial is a main trait of its governance and not just a goal to be understood, and it shows the stability of it. And let me inform you that Colonial SFL has a channel of denunciation that's fully available both for employees and third parties, whose functioning is supervised by the Audit and Control Committee in order to guarantee its independence and efficiency, complying with the whistleblower identity. And in 2025, the board approved new policies and also the update of the policies that already exist, such as the human rights policy, that will align with the International Charter of Human Rights of the United Nations, and the basic non-discrimination and diversity policy. To conclude this chapter, let me tell you that at the beginning of the financial year, we assessed the functioning of the board, its committees, the chairman of the board, the CEO, and the secretary of the board, with an excellent result in all cases. And for that, we have had the advice of the external and independent advisor, George Sand. And the board has the composition and the right capabilities to approach and face the strategic group challenges, regardless of the fact that the assessment will be followed up during the next financial year. And finally, allow me to devote a few minutes to the group's sustainability policy, which is one of its main pillars. It's articulated through the Sustainability Committee, and its functions include to promote strategies, plans, and goals, to assess the progress and highlight the importance of sustainability before it's reviewed by the Control Committee. From an executive point of view, the committee, which is composed by management board members, it assures the operational implementation of the policies issuing from the board and the Sustainability Committee, which shows that sustainability is a cross-cutting priority that permeates Colonial SFL's daily activities. Ladies and gentlemen, with this short summary about the proposal for agreement of our governance and our sustainable management of the group, I've shown you a faithful image of our company. And now I give the floor to the CEO, who will be talking to you to deepen on some very relevant aspects about the company. Thank you.
Buenos días. Hello and good morning, ladies and gentlemen, shareholders. Thank you very much, Mr. Chairperson. I would like to start with some previous considerations before presenting the results for year 2025. Since 2021, as it's well known, one has to underline the political conjuncture that we have had to navigate. We've gone through important geopolitical, financial, and economic turmoils, and one should add that some of these elements have had a direct impact on our sector and to Colonial more in particular. I am referring, for example, to the systemic increase in interest rates or the questionment of the future of remote working. This, of course, has had an impact on our sector. The paradox or the relevant element that one has to underline in this context is that our sector and companies like Colonial, and more in particular Colonial, we've had to respond to these circumstances, and we've done so with a very robust performance in our activities, whereas in the investment and the capital markets, well, prudence has prevailed, a logical prudence has prevailed. Colonial's trajectory has been very strong in these last years, And I think that the year 2025 is no exception, and it is once again a year where we have shown our DNA again. Let me start by reminding what Colonial is. Colonial is a company with a very simple positionment. We are focused on prime assets and, of course, always in a very central location with very high sustainability standards, amongst other standards. What I would like to underline regarding this positionment is that this is a well-thought positionment. It's the result of a predefined strategy, a long-lasting strategy that looks at this position and understands this position as the best possible way to respond to the challenges ahead. We do not only look for the best possible quality of our assets, but also the more robust capital distribution that, of course, leads us to a very high ranking in or by Moody's and other rating agencies, AA1 in the case of Moody's. This belief in the robustness of our assets shows in the locations we choose, the locations we select that are remarkable. I would like to underline the activity of our clients, because we don't limit our actions to our assets, but also to our clients. We have been able to develop a magnificent portfolio of assets. We are not collectionists of the best possible assets out in the market. We're not a passive company. We aim at having a proactive attitude in terms of value creation. More than 90% of our assets have been directly promoted, developed by Colonial, or they have been refurbished and thus repositioned. So behind our strategy, there's a very proactive value creation, proactive strategy. Having said this, allow me to share a few summarized facts about the results for 2025. In 2025, I believe that results have been excellent in many areas. The revenue of the company has reached 399 million euro, and what's even more important, with a comparable growth of +6%, which, as we'll understand later, is way above inflation and also way above the comparables in our environment. This performance of revenue has also turned into an increase in our profit in +9%, 211 million, 33.6 euros per share from an EPRA scope. And behind this, there is an important revenue increase and very high occupation levels. This positive behavior also translates into an increase in the value of our assets, which is now at 12.2 billion euros, with a growth of +3% in like-for-like. And this brings us to a total net tangible asset assessment, which is in 9.70 euros per share at the end of the year 2025, and this basically entails a moderate growth of +1% compared to 2024. This year we have also undergone a significant capital rotation. We've sold more than 300 million, also reaffirming the assessment value. All our transactions have taken place above the assessment value in a framework of prudence in our capital strategy. The loan-to-value by the end of 2025 was at 37.1%, 100 basis points less than the year before, and with a financial cost which is extremely moderated, below 2%. Allow me some additional comments about the strategic positionment behind these results. As I said before, we come from a period, from a few years, that have been marked by the crisis and the revisitation of the real estate model that shall respond to social evolution and to new remote working patterns. The new model that started with the COVID crisis led to the discovery by many companies of the strategic value of prime locations where they are hosted, and this has turned into a pronounced polarization trend of two very well differentiated markets. One, which is the one we're interested in, the landscape where those companies who are more interested in conveying their best values, retaining talent, taking care of their teams, well, they have clearly embraced prime locations and prime assets where they can respond to their priorities. And this quest for the best possible product, this search for the best possible product, has of course turned into a scarcity in the market because there are more and more interested companies and less available product, less available high quality product. And this mismatch between offer and demand has translated into an important growth in revenue, and a sustained one. This dynamic, unfortunately, is where Colonial has always been. We've always been positioned in this segment, and as a result of that, during the year 2025, we've been able to benefit from this market trend. So as a result of the above, the product evolution, our prime product evolution, shows a clear evolution of our income, a significant one, with occupation rates which are extremely remarkable. Occupation rates that, as you can see in the next slide, are around 100% or close to 100% in all our assets, with very high turnover rates and with an income growth. In the case of Paris, 9%, Madrid, 6%, and Barcelona, 5%. So, our behavior in the year 2025 has been extremely satisfactory. The evolution of the income produced by the company is extremely remarkable. In the year 2025, we reached 64 million euros, which means 22% more compared to the year before. The hiring activity has been around 150,000 square meters, and there's also been a remarkable increase compared to the year before, and this has taken place in all the markets where we operate: Paris, Barcelona, and Madrid, both in terms of square meters and millions of euros signed. In Paris, our assets are behaving extremely well. In our main assets, we've seen record income that go above 1,000 euros per share in many locations. Some are growing significantly compared to the market prices of the year before, and here we can see a few examples of what I've mentioned. The same applies to Madrid and Barcelona. The dynamic in the year 2025 has been extremely positive. The revenues, which in year 2024 were 32 million euros, 1 year after, by the end of 2025, ramped up to 42 million euros. This entails a growth of 25%. All in all, to say that the most relevant data, or the summary of the situation, is growth and growth. The revenue growth in year 2025 has been plus 7% compared to the year before. We have accelerated our growth compared to 2024, when growth was stagnant at 5%. So we're speaking about plus 200 basic points. And this growth has happened also in all our markets. This plus 7% corresponds to a growth of 9% in Paris, 6% in Madrid, and 5% in Barcelona. So the average is 7%. I would like to underline that amidst this dynamic of existing products, or additionally to this behavior, there has been a very positive contribution of new projects on which the company is working in a recurrent way. I would like to refer to Magnum. an asset which was called to be the challenge for year 2025 and which closes year 2025 and start 2026 with a remarkable success, both from a business perspective, while we closed 2025 having sold 2/3 of the capacity. As we speak, there are discussions to ensure the full occupation of the asset. We are at above 90% of an occupation rate in this new asset. Beyond the data, beyond the anecdote, I think there is a qualitative nature of the project that has to be underlined. We are speaking about an urban transformation program. It's a belief in a new Madrid location. Magnum represents a belief in a use mix, in a high quality, typical colonial asset, looking for a plurality of elements contributing to the best possible customer experience level. So we are extremely satisfied about the recognition this asset has produced. All these elements have translated into the financial data that we are presenting today. Allow me to start by the gross revenue of the company, which in comparable terms have increased from 256 million to around 400 million in comparable terms. This entails a growth of 6%. I would like to underline a few items regarding this 6% growth. One, we go far beyond price evolution when we live in a society where inflation is a relevant financial KPI. One of the relevant questions in all business sectors and also in the real estate sector is if our sector would be capable of protecting our shareholders from inflation negative consequences, and this has clearly been the case. As I have already mentioned before, in this new context, which is already lasting for 3 years, also year 2025, our revenue increase has grown far above inflation, which from a value proposition perspective for a company like Colonial is fundamental. If we project this at the long run, it's an incredible value in our portfolio. And the second element I would like to underline is that this is not the easy thing to do for companies. A growth of 6% is not an easy to reach milestone for comparable companies, perhaps less well positioned than Colonial, that have closed the year with relevant growth rates yet below ours. If we move now from a revenue analysis to a profit analysis, the dynamic is quite similar. The recurrent result of the company, which was below 200 million at the end of 2024, 193 million. 1 year later, we are at 211 million, a growth of plus 9%. And from a profit per share optics, we shall speak about 33.6 euro per share in the high segment of the guidance we communicated to the market during 2025. And this is the most remarkable about our results. We shall also pay attention to the evolution of our assets and liabilities. The gross value of our assets grows above 12 billion euro. So this represents a growth of 30% compared annually. And this is a relevant figure. One shall also recall that since the systemic transformation of the interest rates, which had direct consequences in the real estate market and more importantly on the demanded returns, while the demanded yields in real estate assets have raised up to 100 basic points, a little bit less in Spain, a little bit more in Paris. And this, of course, represents a devaluation of the assets, an immediate devaluation of the assets. So in this environment, we shall underline that 2025 was a recovery year, a humble recovery year in the value of our assets after this systemic evolution of real estate yields. When it comes to our liabilities, there has been an improvement in the most relevant KPIs, and the most relevant characteristics of our debt have been well maintained. The total debt of the company has decreased. Our loan-to-value has decreased significantly, but perhaps in second and in third place, I would like to underline that this has happened in a high-quality framework of our debt, thanks to a proactive management. Well, today we're paying lower costs than lower than 2%, which is of course far below the normal market cost. Additionally, we do so in an environment with a lot of liquidity, more than 2 billion of cash flow, and our debt for 2026 and 2027 is covered 1.6 times. So the debt Colonial SFL is high quality. So this high quality debt plus the above mentioned is recognized by rating companies, which for quite a long time now are offering us systematically an investment grade in the BBB plus in the case of the Standard & Poor's, and this reaffirms the Moody's assessment, which allow this data to be recognized by the markets. So as I said before, this is one of the main characteristics of our capital structure for 2025, and I would also like to inform you that if we project this figure towards the long run, we can look at the future with a great deal of optimism. With regards to this area, to liabilities, if today's liability is below 2%, and we project this liability with a known data from the market in the year 2025, will be in a very competitive landscape and way ahead the market. In 3 years, we'll be paying a debt cost below 3%, which is quite good. So we've talked about assets, liabilities, we've talked about the results. So all in all to say that this year, for 2025, we will be showing moderate growth, yet there is calm in all areas: revenue, EBITDA, occupation rates, profit, and profit per share. And from this perspective, allow me to do one last reference to what this means for shareholders. Our sector is a rapidly changing one, and today the profitability per dividend is a fundamental element of the remuneration policy to shareholders here in 2025. The revalorization of shares increased, or rather went above 10%. So half of this 10% was distributed in dividends, and this has brought an added attractive to the company for any shareholder thinking to invest in it. In this sense, the dividend that will be presented this year, 33 cents per share, is framed in an historical dividend growth dynamics, which is growing uninterruptedly since year 2016, and the board decided to accessorize it with the possibility of cancel one owns action, which positioned the payment policy at a very interesting point. And this would be the main remarks regarding 2025. I would like to do a short reference to our vision, our midterm vision. As I said in my previous remarks, we shall all remember that Colonial has been able to position itself where it has to. First of all, let's say that cities in Europe are still vibrant, It's where things are happening. Cities are growing even more than the countries where they are hosted. So it's only in cities where we obtain the response to the demand, right, of the citizens and the new patterns out there in the economy. And as I said earlier, with regards to jobs and to offices, it translates into a certain polarization and a search for the best possible locations. And in this pattern, Colonial has been able to position itself as a company in a very peculiar way today. Colonial is a dominant actor in Europe, and more importantly in France and in Spain, in prime locations in reference European cities. In fact, we are amongst one of the few companies with international exposure, and as I said earlier, with a well-consolidated urban transformation approach. Colonial's strategy has traditionally been framed in 3 pillars. First of all, a proactive management approach of our assets. As I said in my previous remarks, we are not passive collectionists of our assets. We look for a permanent value creation approach. Secondly, and on this ground, on this very robust ground, we look for an additional added value layer leveraged on new projects, the ones we call alpha projects. We are now immersed in alpha X projects. The X is or represents project number 10, and we hope that more to come. And there we look for additional product to incorporate into our portfolio and bring added value. And the third pillar is asset rotation, which has been seen in year 2025, has proven to be a good strategy. Selling at interesting prices would with rotated in the market. So these 3 pillars, if we look at the midterm and long-term projection, I would like to refer to the second pillar on alpha projects. Alpha projects will be a central element to contribute to value creation in the next 3 years. These projects are called to produce a total revenue of around 100 million, more than 100 million. The first of these projects has already been delivered, the Magnum, which was the main challenge of the company for 2025. The rest will no doubt contribute to our accounts, to our results in the next years, with more than 110,000 extra square meters. And from a financial perspective, this should contribute to a profit per action, to the projected profit per action in the near future, which shall be around 11 cents per share. On these grounds, we are forecasting a year 2026 that shall be framed in the historical growth of the profit per action dynamics, and we have communicated the market a guidance for the closing of the year of between 34 and 35 euros per action. If we look beyond, what we look at is a sustained strategy of our profit per action. More recently, we have carried out the market capital day, when we communicated to the market our estimates, our profit estimates in the mid-run, which we estimated between 31 and 34 euros per share by the end of 2024, which represents an aggregated growth of around 25%. Colonial and comparable companies are companies where dividend plays a relevant role. We estimate that the mix element composed by dividend plus the expected flows growth to position the total remuneration for shareholders above 10%. All in all, to say that, as the chairperson said before, year 2025 has been a very positive year, especially because Colonial has had to operate in a very adverse context that we believe we've been able to manage. And we also want to convey a message of hope and trust and belief in the future evolution of our results. Thank you very much.
Muchas gracias.
Well, thank you. So, once the different speeches have been made, we will inform the AGM about the questions sent in writing by the shareholders, and we will
a la lectura de su intervención.
And we will define them, we'll identify them previously before the reading. We inform you that the information and questions asked will be answered by the chairman, the CEO, or any other board member. Okay, so now we shall proceed to reading the different questions asked. There has only been one question by Mr. Juan José Camargo Lara, and I shall read it next. Mr. Camargo would like to know what is the dividend policy in the company, short, medium, and long term. Mr. Vignoles, you have the floor, sir. Thank you very much indeed. This is something I have described in my presentation. Well, let me make 3 or 4 comments about it. First of all, the dividend policy, is proposed by the board and it is presented to the AGM for its approval. But there are some additional comments I'd like to make about it. First of all, systems, REIT in general, are companies whose structure is designed for a massive distribution of the profits generated. And from this point of view, let me send you a comfort message. Colonial's dividend policy will always need to be a policy devoted to distributing most of the profits that have been generated. Additionally to this, let me add that, as we have seen in the presentation, we have looked historically for the fact that these dividends have a growing trend. They should have a growing or upwards moving slope. And nowadays, we work with expectations of the earnings per share, medium term, of 20%, which is at about 40 cents medium term. If these were confirmed, and of course we are awaiting the different geopolitical events that can always affect our forecasts, but if these were confirmed, we will need to wait under normal terms, a growing dividend that's well aligned with a high payout policy over the profit forecasted for the future. Okay, given that there are no further questions, and there has just been one question by Mr. Camargo, we will now proceed to the voting of the different points in the agenda. And I give the floor once again to the Secretary. The agreements that are presented to the voting of the shareholders are the ones suggested by the board to the AGM. So from that point of view, we would like to say that no shareholder has used his or her rights according to Article 519 of the Capital Company Law to present proposals that are different from the ones presented by the board. And there has been no inclusion of additional points in the agenda. So the voting of all of the agreements will be carried out according to what's foreseen in Article 22 of the rules of our AGM through a negative deduction system. For that, we believe that we would take as favorable votes all of the shares presented or represented, deducing from that the votes belonging to the shares whose owners or representatives express so through the remote attendance platform as being against or their abstention. The votes whose holders have voted against in white or have abstained previously before the AGM through the channels, the remote channels made available to the shareholders, or the votes whose holders or representatives have abandoned the meeting before the voting, and they have let the notary public know that what the vote was through the remote attendance platform. The period for the issue of the voting about the proposals in the points in the agenda will be summarized the moment the voting is done according to Article 22 of our AGM. I proceed for greater agility to carry out a summarized reading of the agreement proposal presented to the AGM. Point number 1 in the agenda. We present for the approval of the AGM the individual annual account and the company's management report duly audited for the financial year that ended on the 31st of December 2025, and also the consolidated annual accounts and the consolidated management report of Group Colonial SFL duly audited for the financial year that ended on the 31st of December 2025. Point number 2 of the agenda. We present for the approval of the AGM the proposal of applying the result belonging to the financial year that ended on the 31st of December 2025, and also the approval of the distribution of the dividend of 32 cents of euro per share. Point number 3 of the agenda. We present for the approval of the AGM the management of the board and its chairman and CEO during the financial year that was closed on the 31st of December 2025. Point number 4 of the agenda. We present for the approval of the AGM the reduction of our equity with charge to reserves for a nominal amount of 36,250,000 euros through the amortization of 14,500,000 shares of 2.50 euro of nominal value, each one of them, which represent 2.311% of the company's share capital. Point number 5 of the agenda, we present for the approval of the AGM the authorization to the board to issue on behalf of the company once or in different times for a maximum of 5 years convertible bonds or conditions that can be turned into new shares, into new company shares, or other values that can give a right directly or indirectly to the subscription of shares by the company with express attribution of, actually to exclude the right to preferred subscription, leaving this for a nominal maximum amount as a whole of 20% of the share capital. Point number 6, we present for the approval of the AGM the authorization to the board for the reduction of the call terms of the extraordinary AGMs according to what is said in Article 515 of the Capital Law. Point number 7 of the agenda will present for the approval of the AGM the relation of Mr. Juan José Brujera Clavero as a board member of the company as another external one, and we present for the approval of the AGM the relation of Pedro Viñola Serra as executive CEO of the company. Point number 8 of the agenda, we present for the approval of the AGM the remunerations policy for board members in 2027, 2028, and 2029. Point number 9 of the agenda, we present for the approval of the AGM a new long-term incentives plan for the delivery of company shares. Point number 10 of the agenda, we present for the voting of the AGM with a consultative character the annual report about the board members' remunerations for 2025. Point number 11 in the agenda. We present for the approval of the AGM the amendment of Article 1 of the rules about the AGM in order to adapt its writing to the new company's name. Point number 12 in the agenda. We inform the AGM about the change of the company's board, the company's management board rules in order to adapt its writing to the company's new name. Point number 13 in the agenda we present for the approval of the AGM. We give the right expressly to the chairman of the board, the CEO, the secretary of the board, and the vice secretary of the board to elevate, public, and develop and implement the previous agreement. Right now, we conclude the voting period of the proposals of the points included in the agenda. Given that the AGM has been constituted validly in its first call with the presence of shareholders which represent more than 50% of the company's capital, of the share capital, the proposals will be approved by a simple majority of the votes of the shareholders present or represented. However, points number 4 and 5 of the agenda demand for their approval a reinforced majority, and they will need to be approved by an absolute majority of the votes of the shareholders present or represented. On the other hand, point number 6 in the agenda demands for its approval the favorable vote of at least 2/3 of the share capital with voting right. And next, we will inform the shareholders about the result of the votings that have been proposed, expressed by the board based on the votes issued by the holders or representatives of shareholders. Each one of the shareholders can be the results projected in the screens. Point number 1 of the agenda with regards to the approval of individual annual accounts approval and the management report. There has been a 99.96% of votes in favor. With regards to the approval of the consolidated annual accounts and the consolidated management report, there have been a 99.96% votes in favor. With regards to point number 2, with regards to the application of the results, there has been a 99.98% of favorable votes. With regards to the distribution of dividends, there have been a 99.98% of favorable votes. Point number 3, with regards to the social management, there has been a 97.56% of favorable votes. Point number 4 in the agenda, with regards to the share capital reduction through the amortization of treasury stock, has obtained 99.98% of favorable votes. Point number 5, with regards to the authorizing the board to issue convertible bonds into company shares or other similar values, has been a favorable voting of 93.35% of the issued votes. And point number 6, about the authorization to reduce the term to call extraordinary AGMs, it has obtained 95.25% of favorable votes, which accounts for 71.91% with regards to the total share capital with voting rights. Point number 7 in the agenda, with regards to the re-election of Mr. Juan José Brujera Clavero as board member, has obtained an 86.33% of favorable votes. And with regards to the re-election of Mr. Pedro Viñola Serra as board member, has obtained a 99.18% of favorable votes. Point number 8, with regards to the approval of a new policy, a new remuneration policy for board members, it has obtained 97.88% of favorable votes. Point number 9, with regards to the approval of a new long-term incentives plan, has obtained 90.57% of favorable votes. Point 10, with regards to the consultative voting about the annual report on the board members' remunerations, has obtained a 98.64% of favorable votes. Point number 11, with regards to the amendment of Article 1 of the AGM's rules, has obtained 99.98% of favorable votes. And point number 11, with regards to the amendment of the management board rules, it is an informational point. We remind shareholders that this point has not been subjected to voting. And point number 13, with regards to the delegation of powers, has obtained a 99.93% of favorable votes. Fine. So, after having counted the votes and bearing in mind that the information received by the board with regards to votes against, in white, or abstentions expressed through the means made available to the shareholders, we declare all of the proposals included in the agenda to be approved. The notary public will include in the minutes the detailed information about the specific number of votes in favor, against, in white, or abstentions that have been issued with regards to each one of the points in the agenda. And the approved agreements and the results of the votings will be fully published on our corporate website according to the rule that's applicable and the rules of the AGM. Thank you very much, ladies and gentlemen, shareholders all. We call it an AGM, and we thank you once again for your attendance and your commitment with our company. Thank you.